Hello and welcome to India Business Hour. I'm Arundhati Ramnan and here are the headlines that we're tracking for you this evening. China increases tariffs on US goods to 125%. Beijing says it will ignore any further tariff increases by the US government. Xi Jinping says there are no winners in a trade war and China is not afraid as he plans to visit Vietnam, Malaysia and Cambodia to strengthen trade ties. Volatility haunts global markets as trade war intensifies. Stocks trade mixed across Europe and US. Equities also tumble across Japan and South Korea, but China and Hong Kong buck the trend thanks to domestic buying. Sensex and Nifty gain 2% as stocks react to US pausing 26% reciprocal tariffs on India by 90 days after a trading holiday yesterday, but both indices end the week in the red as tariff tensions keep investors on edge. United States Vice President J.D. Vance may soon visit India for further trade talks. Visits by Indian officials to the U.S. on the cards as well. Sources say that contours of the bilateral trade deal may be ready in the next 90 days. India is unlikely to offer any unilateral concessions to the U.S. automobile industry, say government sources. Officials are considering substantially lower tariffs on imported cars, which cost more than 40 lakh rupees. No final decision just yet. Gold prices hit a record high once again as investors rush towards safe haven assets. Oil prices fall over demand concerns. TCS sees some minor ramp downs and delays in decision-making by clients, but no major project cancellations so far due to Trump's tariffs. CEO Krithivasan says clients are in a wait-and-watch mode and there is no panic. Apple airlifts more than 1.5 million iPhones from India as it looks to avoid US tariffs. Amazon CEO Andy Jassy expects sellers to pass on the increased tariff cost to customers. JP Morgan and Morgan Stanley beat expectations with Q1 earnings. Jamie Dimon says US economy faces considerable turbulence due to the trade wars. AIADMK and BJP form an alliance in Tamil Nadu, decide to contest the 2026 state assembly elections together. Home Minister Amit Shah says former Chief Minister E. Palanisamy will lead the alliance. Nayanar Nagendran to replace Annamalai as the Tamil Nadu BJP chief. Hajmola candy under GST enforcement agency's lens. The DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as candy that would attract a higher GST of 18%. The top story this evening, the world's two largest economies are raising the stakes in an all-out trade war. Just a day after US clarified its tariffs on Chinese goods now stand at 145%, China has hit back. Beijing has raised the tariff on US goods to 125%. In a statement, the Chinese Commerce Ministry said it will not react to any further tariff increases by the US. Beijing said, and I quote, "Even if the US continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of world economy." End of quote. The statement went on to say, and I quote again, "With tariff rates at the current level, there is no longer a market for US goods imported into China." End of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said there are no winners in a trade war and China is not afraid, in what was his first reaction to the US tariffs. He also called for closer trade relations between China and the European Union. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All of these nations have been hit with higher tariffs by the Trump administration. The man who started the tariff war remains unfazed. US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a deal with China.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
China has decided to up the ante, raising the additional tariff to match President Trump's 145% tariff. So it's raising this additional tariff on all American goods that come here from 84% to 125%. Again, this would cover all American goods, and it would start on April 12th. Now, the other interesting part of this announcement is this sentence. Given that at the current tariff level, there's no market acceptance of U.S. imports, if the U.S. continues to impose tariffs on Chinese exports, China will ignore it. In other words, they're saying that they don't believe that Chinese people will actually buy American goods because they would be so expensive with these additional tariffs. So they said that if President Trump does continue to impose tariffs, then China is just going to ignore that. In fact, the Commerce Ministry also echoed that, saying today that China will ignore President Trump's, quote, numbers game. Now, while all of this is going on, China's President Xi Jinping has been courting all different sorts of countries. Today, he met with the Spanish Prime Minister, and he actually invited the EU through the Spanish Prime Minister to help China resist what he described as a unilateral bullying. In addition to that, we've been hearing more reports that the EU is going to be sending leaders here to plan a summit with Beijing, potentially in July. Now, in addition to that, President Xi is also looking towards Southeast Asia. In fact, the government here announced that President Xi is going to visit Cambodia, Malaysia, as well as Vietnam.
Stock markets are volatile across the world. Markets are trading mixed across Europe and the United States. European markets turned sharply lower after China retaliated with 125% tariffs on the US. Asian markets also saw a sell-off following yesterday's relief rally, but stocks in China and Hong Kong ended in the green thanks to domestic buying. Meanwhile, Sensex and Nifty gained nearly 2% in trade as Dalal Street reacted to President Trump's 90-day pause on reciprocal tariffs after a trading holiday yesterday. The U.S. has only paused the 26% reciprocal tariffs, and the 10% increase in baseline tariffs remains in place. Sensex gained over 1,000 points. Nifty gained over 400 points. Mid-caps and bank stocks also saw a relief rally. But for the week, both Sensex and Nifty ended with minor losses as tariff tensions keep investors on edge. Nifty Bank Index has lost 1% this week despite the Friday rally. It has been a wild ride for markets across the world this week, and it's not just stocks. Commodities, bonds and forex markets have also seen intense volatility. Prashant Nair joins us now with a wrap-up of the week that was for the global markets.
Well, it's been nothing short of a wild ride on the street across asset classes, across continents. Let's start with the big one, the S&P 500. The average daily swing on the S&P 500 over the last 4 sessions is 7.8%. I mean, that is absolutely a whiplash, and you can call it volatility, but really a whiplash. What about volatility itself? I'm talking about the CBOE Wix. If you take April 2nd as the starting day, which is the Liberation Day, the CBOE Wix from the 2nd to the 8th shot up 143% from low to high. To get to these kind of moves back in the past, you have to go to the dot-com bust, the Asian crisis, the GFC, or the Greek debt meltdown. Now to the bond market. Since Liberation Day on April 2nd, the 2-year yield is flat. The 10-year is up 26 basis points. Remember that Friday, the 10-year got to about 3.9%. The 30-year in this period is up 35 basis points. Basically, the long end is rising and is signaling higher risk premiums ahead. The dollar index itself, the dollar index has gone the other way. It slumped 4.5% since April 2nd, breaking below the critical 100 mark. I mean, the dollar is not behaving like it usually would in times of extreme stress, not like a safe haven. What about China? Now, China is central to this crisis, with Trump trying to correct perceived wrongs with respect to that country. Well, despite the 145% tariffs imposed by the US, the Shanghai Composite is down just 3% week on week. Do remember, though, that what is called the China National Team is out there in full force trying to stabilize markets. Let's take a look at a country like South Korea. Big exposure to the US market in terms of trade. Inside of the same week, the Korean stock index hit both limit down and then limit up. It's a historic first for that market, fear and FOMO back-to-back. Now, a few commodities, gold to begin with. Between the 2nd of April and 8th, Gold dropped 5% high to low as everything was liquidated, but then bounced 7.6% to where it is now, and it's hit a new all-time high. Oil got crushed. It's lost 16% high to low in just 6 days. Another casualty, of course, of the macro mayhem. Overall, commodities have had it tough. I looked at the Bloomberg Commodity Index. It's fallen 9% in the same stretch, a broad-based signal of economic concern. So as we sort of head into the 3-day weekend for some much-needed rest, I was thinking that maybe we need a name for this crisis. You know, we have the SVB, the Silicon Valley Bank, the GFC, the global financial crisis, the Greek debt crisis, pigs, Asian crisis, whatnot. So here is my suggestion. GTC, the global trade crisis. Back to you.
All right, Prashant, many thanks for those details. Now, equity mutual fund inflows fell by 14% in March, according to data released by the Association of Mutual Funds. Net equity flows saw a dip of 40% from the peak of 42,000 crore rupees in October last year. Despite the sharp decline, SIP inflows remained steady at nearly 26,000 crore rupees. Gold ETFs saw net outflow of 77 crore rupees as investors booked profits after a bumper rally. And prices of cryptocurrencies surged, with Bitcoin hovering around the $82,000 mark after US President Donald Trump reinforced his pro-crypto stance. He signed a bill to overturn a rule from the Internal Revenue Service that classified decentralized cryptocurrency exchanges as brokers. The rule had aimed to crack down on crypto users who may be failing to pay their taxes. Jahangir Aziz, the head of emerging market economics research at JP Morgan, expects a recession in the United States in the second half of the year due to the ongoing tariff war. He also warned that if US and China trade comes to a halt, it would deliver a shock to the global trading system. Take a look.
So after the pause, we are still sticking with that, second half of the US will go into recession. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. US-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. Most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is an actual shock to the global trading system. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared.
US Vice President J.D. Vance is likely to visit India soon for trade talks. Sources say that contours of the bilateral trade deal may be ready in the next 90 days. Abhimanyu Sharma gets us more. Abhimanyu?
Amidst the global discourse on reciprocal tariffs, sources have indicated that it's difficult to have a BTA, that is a bilateral trade agreement between India and the US in 90 days. However, the shape and form of the BTA may be finalized in a period of 90 days. Also, India remains in constant engagement with the United States, with the EU and several other geographies. And it's likely that more Indian officials may visit several other countries and geographies in the coming weeks to finalize negotiations or to proceed for a trade deal. Sources also added that there is a likelihood of trade diversion from various countries, including China, where it's possible that there are excess capacities for exports due to a fall in overall demand of imports from several OECD countries, as well as imposition of reciprocal tariffs by the United States on China. Hence, the Customs Department has been asked to keep an eye on any unusual surge in exports or imports from India to check if any trade diversion is being undertaken from India. Sources added that government has also cautioned the industry that India will not be a source of trade diversion, and the industry needs to prepare for a time of zero tariffs or no tariffs and to ensure that there is no protectionism. Sources also added that protectionism may save 1,000 jobs, but it may cost 140 crore Indians dear by breeding inefficiency. It remains to be seen how early the negotiations are going to take place between India and several other countries, while it's also likely that US Vice President J.D. Vance may visit India in the coming weeks.
All right, Abhimanyu, thank you so much for those details. Now, Commerce Minister Piyush Goyal has said that while India has been talking to the United States, United Kingdom and the European Union for standalone FTAs, the country will not rush into any agreement. Speaking at an event today, Goyal said that India will not negotiate with a gun to its head. Take a look.
हमने पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते। समय की पाबंदियां अच्छी रहती हैं कि वो प्रोत्साहित करती हैं कि तेजी से बात हो, लेकिन जब तक देशहित और जनहित को हम सुरक्षित ना रख सके तब तक कभी भी जल्दबाजी करना अच्छा नहीं है।
And staying with tariffs, sources tell CNBC TV 18 that India is unlikely to offer unilateral tariff concessions to the US on automobiles. However, the government could lower tariffs on imports of cars worth 40 lakh rupees and above. Parikshit Luthra is here with more on the government's plan.
India's tariffs on the automobile industry have taken centre stage in trade negotiations with the US, UK and EU. Sources say despite the pressure from the US government, India is unlikely to offer any unilateral tariff concessions to the United States in the automobile sector, where the highest tariffs on the import of CBUs is 100%. The Indian government's focus is to reach an early understanding on the bilateral trade deal and get a reprieve from America's 25% auto tariffs. But sources say the government is considering lowering tariffs substantially on imported cars, and there is a strong intent to do so, despite the pushback from the industry. The government is considering lowering tariffs on import of premium cars from the United States, which cost above 40 lakhs with a fixed quota per annum. The government is exploring different scenarios to offer tariff concessions on imported cars, but the final decision is yet to be taken. Tesla's India entry would also be contingent on India-EU FTA, as cars would be imported from Berlin, and Tesla would wait and see the kind of tariff arrangement India and EU actually reach. India would have to offer the same tariff cuts in the automobile sector to US, UK and the EU, as all three have sought auto tariff cuts. Even the response to India's scheme for manufacturing electric cars is likely to depend on tariff cuts offered to US, EU and the UK. While the scheme offers 15% concessional import duty over the 100% currently imposed, companies have to commit to making in India with a $500 million investment. Guidelines for the scheme are yet to be issued, and all car makers would first like to see India's tariff cuts before applying for such a policy.
Right, Parikshit. Many thanks for those details. Now, the big macro data of the month. India's industrial output grew by 2.9% in February, lower than the 5.2% growth it saw in January. Manufacturing and mining sectors saw a bigger slowdown compared to the other sectors. IT giant TCS reported its fourth quarter earnings yesterday, missing street estimates on revenue, profit and margins. When asked about the impact of tariffs on the company, CEO K. Krithivasan said that the company was seeing some minor delays in decision-making by clients, but no major project cancellations so far on account of the global uncertainty. He added that customers are in a wait-and-watch mode, but there is no panic.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction.
Tech giant Apple has airlifted 600 tons or 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which has far lower tariff levies compared to China. But Apple continues to make most of its iPhones in China and has not announced any plans to scale back in China. The Wall Street Journal is also reporting that Apple plans to increase iPhone sourcing from India to offset China tariffs.
They have no choice unless there's a deal very quickly between the U.S. and China, and the tariffs go back to where they were before Trump became president for a second time, then Apple would probably try to stick closer to the status quo. And there is a lot of uncertainty about what Trump will do because his tariff policies have changed so frequently, sometimes day by day. So there is uncertainty, but in general, the trend for Apple has already been to increase production in India, perhaps by some estimates we hear, perhaps 15% or more of the iPhones this year will be made in India. And where possible, I think they will try to export more from India to the US to avoid those tariffs.
Amazon CEO Andy Jassy said that its third-party sellers will likely pass on the cost of increased tariffs to consumers. In an exclusive conversation with CNBC, Jassy also added that they have not seen a meaningful shift in consumer behavior just yet.
I'm guessing that that sellers will pass that cost on
fully.
I think they'll try, and I understand why. I mean, depending on which country you're in, you don't have 50% extra margin that you can play with. So I think they'll try and pass the cost on. And as I said, it's so early right now, but we haven't seen any change in consumer behavior in a meaningful way yet.
Onto the big global earnings of the day. JP Morgan beat estimates in Q1 with 9% growth in profits and an 8% growth in revenue. But CEO Jamie Dimon issued a warning to investors. Dimon said, and I quote, "The economy is facing considerable turbulence with the potential positives of tax reform and deregulation and the potential negatives of tariffs and trade wars," end of quote. Staying with earnings, Morgan Stanley reported a good set of first quarter numbers amid global volatility. Its overall revenue increased by 17%. However, it was the equity trading revenue which stood out at $4.13 billion, an increase of 45%. This surge was largely driven by Asian market and operations catering to hedge funds, the company stated. Alphabet's Google has reportedly laid off hundreds of employees as a part of an ongoing restructuring program. As per reports, employees from the platforms and devices divisions, including Android software, Pixel smartphones, and the Chrome browsers, have been affected by the layoffs. The restructuring began after Google Android and Chrome teams under the Pixel and devices group last year. On that note, it's time for us to head into a break. But coming up on India Business Hour, Hajmola candy under GST Enforcement Agency's lens. The DGGI is investigating whether Dabur's Hajmola should be classified as an Ayurvedic medicine or as candy. More on that on the other side. And you can also catch all CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X, and Geo Hotstar. Welcome back. You're still with us on India Business Hour. A quick look at the global stories that we're tracking this hour. The United States and Panama have signed a deal which will allow America to deploy its troops to a string of bases along the canal. However, USA cannot build permanent bases along the waterway. The agreement is a major win for President Trump, who seeks to re-establish influence over the Panama Canal. The Israeli forces launched an air assault on a multi-story residential building in Gaza, which has reportedly resulted in the death of over 30 people. The World Health Organization's chief has warned regarding more casualties which are likely to take place due to Israel's blockade of medical aid in Gaza. Reports suggest that more than 10,000 people require immediate medical evacuation. A New York City sightseeing helicopter crashed upside down into the Hudson River, killing the pilot and 5 Spanish citizens. Siemens executive Agustin Escobar and his wife, along with their 3 children, lost their lives. According to a flight radar report, the chopper flew northwards along the Manhattan skyline and then descended on the southern direction towards the Statue of Liberty. Back home, the founder and CEO of Delivery, Sahil Barua, has resigned as an independent director on the board of Swiggy. The food delivery company informed this to the stock exchanges. In his resignation letter, Barua cited increasing work commitment and said he was unable to dedicate the necessary time and attention to fulfill responsibilities as an independent director. Barua was among the first independent members of the Swiggy board, who joined 2 years ago as the company was gearing up for an IPO. The resignation comes days after Delivery acquired rival firm Ecom Express in a fire sale. Hajmola candy comes under GST Enforcement Agency's lens. Sources say that the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as candy that would attract a higher GST of 18%. Timsi Jaipuria is here with all of those details. Timsi?
Well, Dabur India and DGGI are at loggerheads. What we are given to understand from sources is that Dabur's Hajmola candy is currently under DGGI scanner. The Directorate General of GST Intelligence is investigating the classification of Hajmola candy under the GST regime. To be precise, DGGI's Coimbatore zone is currently investigating whether Hajmola candy should be treated as an Ayurvedic medicine, attracting 12% GST, or as a candy under 18% GST. Dabur, during the investigations, claims to DGGI that Hajmola candy is an Ayurvedic medicine and not a regular sugar-boiled candy. Meanwhile, email queries sent to Dabur India remains unanswered, and Dabur, also important to note here that Dabur in the pre-GST regime faced a similar challenge through Supreme Court, and it had got clarity in the favor of the company, stating that Hajmola candy is an Ayurvedic medicine. Also important here that Dabur is already facing a tax demand. Dabur on 1st of April disclosed that it has received an income tax reassessment order demanding 110.33 crores for financial year 17-18. The Income Tax Authority alleges that Dabur made incorrect claims for tax deduction related to in-house research and development under Section 14A of the Income Tax Act. Meanwhile, Dabur said that it plans to challenge the demand. So let's see what happens finally, whether government actually goes back to the council to change the classification of Hajmola candy, or the previous Supreme Court ruling comes in the favor of Dabur when it comes to this particular DGGI case. Something that we'll have to wait and watch for.
All right, Timsi, many thanks for those details. Now, AIA, DMK and BJP had formed an alliance in Tamil Nadu and have decided to contest the 2026 state assembly elections together. Home Minister Amit Shah and AIA, DMK Chief Edappadi Palaniswamy addressed a press conference jointly. Shah said that former Chief Minister E. Palaniswamy will lead the alliance. Meanwhile, Nena Nagendran is set to replace Annamalai as the Tamil Nadu BJP chief. And with that, it is a wrap on this edition of India Business Hour. Many thanks for watching, but keep it with CNBC TV 18. More news and updates continue right here.